Thanks for joining me. This is Jeffrey Ho from Elite Lending. He's a senior partner at a mortgage brokerage out in Vancouver. And there's been a lot of questions that I'm getting from my clients, and maybe you can shed some light and some details on what are some of the things that are going on. We're hearing all these things from the government to the banks and all that kind of stuff. So what are some of the recent government announcements that may affect or benefit Canadians that you're aware of?
So a couple of weeks ago, as most of you may have heard, that the banks have announced a mortgage deferral program to allow those who are financially affected by the COVID-19 to defer their mortgage payments and their loan payments for up to 6 months. The banks have received over 100,000 applications recently, which is unheard of, and they've never experienced anything like this before, so they don't really know what to expect. And as a result, what I've been hearing is they are quite concerned about this.
Is the deferral program as easy as it sounds, or should there be some concerns that people should take into consideration before making that application?
This is a really good question because this is still very new. And when the government announced this policy, the banks haven't really properly informed their staff yet. So when some of my clients are calling to ask questions about the mortgage deferral program, the banks are not actually equipped to answer some of these questions. But over the last couple of weeks, banks are actually coming up with solutions for some of these clients. What I've been hearing is you are allowed to defer up to 6 months worth of interest portion. So some banks are still making people pay the principal portion, but you have to make a minimum payment of the interest only portion. But if you're seriously affected and you can't even afford the interest portion, as long as you've had your mortgage for a minimum of 3 months, some banks are allowing you to defer the full payments. That being said, the interest and the principal portion that you're deferring will be added onto your principal of the mortgage, and interest will be accrued on top of that.
If people are deferring their payments, they're actually going to be paying a lot more down the road. But I guess that's what deferring means. But is that something that people should be looking at?
So deferring your mortgage payment doesn't mean that the payment just disappears. Deferring your mortgage payment basically just means that you're delaying in paying your mortgage. So to give you an idea, on a typical mortgage of $2,500 monthly payment with a 20-year remaining amortization on your mortgage, if you defer your payment up to 6 months, at the end of the 20 years, you'll be paying an extra $11,000 worth of interest. If you divide it by the 20 years, that's approximately $550 per year, but it allows you to defer your payment up to 6 months. If you're somebody who is really stretched and are affected financially, then my recommendation is to take it, because in a grand scheme of things, a $450,000 mortgage with an extra $11,000 worth of interest over 20 years is not that big of a deal. But obviously, if you can afford the payments, then my recommendation is to keep making your mortgage payment and do not defer it. Because if you can avoid paying an extra 11 grand over 20 years, then why not?
Where is the mortgage rates at right now?
Bank of Canada have announced a few rate cuts within a month. So this is all signs of the economy being affected negatively. The banks have followed, their interest rates have came down to as low as around 2.39 on a 5-year fixed rate a couple weeks ago, which is very, very low. But there are signs of banks increasing interest rates again in the last couple of weeks. And the reason why is because they are facing liquidity issue. A lot of people are applying for mortgage and loan deferrals, a lot of people are actually missing their payments, and banks are very, very concerned about this. So they have actually increased interest rates and have tightened up some lending guidelines to discourage people from borrowing more money.
Is this concerning for consumers right now? Should they take advantage of the rates before they keep going up, or where do you think the rates are going to go from here?
If you're currently at a variable rate mortgage, then congratulations, because what I've been hearing is a lot of people who've had variable rates over the last couple of years are seeing interest rates dropped down to the 1.6, 1.7% interest, which is pretty good. So a lot of bankers are actually calling these clients to convert these variable rate mortgages into fixed rates, but don't do it. Just keep it at variable rate, because this is the best time to hold variable rate right now. If you are currently holding a mortgage with a fixed rate, what I've been seeing, and according to my calculation, is if you have an interest rate of around 3.39 and above, there's an opportunity for you to save money, even though you are paying a penalty to switch over to today's mortgage rates. My recommendation is to reach out to your mortgage advisor to do an analysis to see if it makes sense for you to switch from fixed to variable rates.
I guess you would do that if you foresee the interest rates to remain low for the next few years, or like the foreseeable future, right?
Rates are going to remain low in the next little while this virus is still going on. But my personal prediction is that the Bank of Canada may increase interest rates after this whole thing is over. But if you look at the last 10 years, variable rate versus fixed rate mortgages, if you're in a variable rate mortgage, you're actually saving more money than if you're holding a fixed rate mortgage. But if you are someone who will lose sleep over a government announcement in interest rates and you want stability, then go with fixed rates.
What about people who are currently in a mortgage and they're thinking of refinancing? They should also look into variable rate. Is that kind of what you're suggesting right now?
Yeah, like I said, in the last 10 years, people who were in variable rate mortgages have saved more money. So at this time, I would suggest looking into the variable rate option over the fixed rate, especially with prime rate being so low right now. The good thing about the variable rate is you can convert it into fixed rate anytime you want. So you always have that flexibility. If you do regret it, then you can always convert back into a fixed rate.
Are there any other like credit programs that people can have access to, or that you would kind of look into to kind of get through this tough period of time?
Other than the mortgage deferral program, I know banks are also allowing customers to defer some of their credit card interest and car loan payments as well. So definitely reach out to your bank and ask for the deferment if you need it on those programs. The government has also announced a $40,000 loan,
Grant?
an interest-free loan, for 1 year for small businesses. And this is available through your local banks, but they're still coming up with the detail on how to apply and who will qualify for these loans. So I would stay tuned with the government's websites, and when they announce more detail, reach out to your local banks and ask them if you qualify for these loans.
Everyone's got a lot of questions right now, and we're all trying to figure this out as we get through this. So thanks for sharing.
Yeah, it's crazy times right now, and we've never experienced anything like this before. So this is new to everybody. But if you guys have any questions, feel free to reach out.
Cool. Thanks. We'll talk
All
to you
right.
later.
Okay. See ya.